Hello, this is James Folks, and welcome to the SImpleVesting Tribe weekend weekly newsletter video. And let's get started. We're starting with the NASDAQ Composite, which is tech. As you can see, everything's still going sideways. The most recent action this week put this at let's take a look, at up 3% for the week, which is pretty strong. As you can see, we still haven't broken out yet. We're still kind of sitting here in this level, in this range, but we're hanging out at the top of the range, so that's a good thing. Next we have, let's see, that's not where I want to go. Gold. Gold had a huge breakout this week. As you can see, we broke out this, in particular this day. It is a good bit extended here, so if you're in there, you know, be careful. Other than that, hey, if you're a gold bug, it's a good time to be a gold bug. Next we got S&P 500 still sideways. Again, we're hanging out near the top of the range here, so we can consolidate and move sideways, maybe have a little pullback here to this 1115 or 1100 range and then get going. That would be fantastic for all you longs out there, including me, who would, like to. Everyone likes to see the stock market go up. No one likes to see it go down, except for those pesky shorts. Let's see what's next. We got small cap. Unfortunately, small cap is still lagging a little bit, which is not what I really like to see. You usually like to see small cap leading the market, not trailing a little bit here. But as you noticed the tech and also the S&P were all right up in the top of the range. Small caps are still right around here in the middle. So keep an eye on that. Sometimes that signifies a false breakout when the other indices break out and small caps don't follow. Sometimes that's an indicator of a false breakout. Just something to keep an eye on. Next we got large cap again. This is the Dow. The Dow's, same deal, sideways, still at near the top of the range. Would like to see it a little bit stronger, but tech's strong. That's a good thing. Airlines. Let's see. Silver. Silver also had a huge breakout here. As you can see, the same deal as gold. It's a good time to be in precious metals. Internet service providers are on a tear. That's another one of the sectors that's been strong over the past year. I'll go through a couple of the stronger sectors for you just so you can get a look at them. Also, telecom services, domestic telecom has done fairly well. As you can see, this broke out right around here and has been just straight up ever since. Definitely a little bit extended. When you see things that look V-like like this, certainly not something you want to be getting long now. Because it's well extended. You've missed some of that move. But if we get a pullback right around to this area of former resistance, that would be a great place to get long if that's your thing. Another auto parts, another industry that had a mini breakout here. That looks nice. And again, if that could come back down a little bit right into this range and hold, that's another sector that's good. I don't like to get long these things while the market's moving sideways, but a lot of people do, and if that's your thing, go for it. Real estate, healthcare facilities have also been strong, and regional airlines, for some reason, I have no idea why, but this is what the chart's telling me, that regional airlines, for some reason, are fairly strong. And in addition to residential real estate investment trusts, here, as you can see, they're pretty close to possibly having a breakout here. If they can kind of motor through this area, they're kind of consolidating right here near the level of past resistance. That's a perfect spot for a little pullback here, or to go sideways for a little bit and then break out there. Then you'd wait for the next pullback to this area and get long. Real estate's something we've been long in for a long time, actually, in the SImpleVesting Insiders Club. We've been long that since sometime in 2009. We've been long real estate. What's next? Bonds. Bonds are interesting because they're having a major pullback here, which could be a sign of strength for stocks. So definitely keep an eye on bonds, because when they pull back like this, or if bonds go into a downtrend, a lot of times that means it's time for a market move up in stocks. Restaurants are also on a big move here for some reason. I guess people are still eating out, even though this big so-called recession is going on. Chemicals have been extremely strong. Also, beverage brewers have been very strong over the past, 4 months. As you can see, they've gone from here straight up over the past 4 months, which is very strong. So, good. People are drinking beers again. And let's see what's next. And that's it.